everyone, John Henry here, slingshotfutures.com. Welcome to the Futures Market Outlook and Trade Plan for tomorrow's trading. Tomorrow being the 23rd of January, 1/23 of 18. Looking at the markets, we have, well, starting off with the euro, some pretty good movement overall in the bigger picture. Now, in the more recent time frame, we really don't have a whole lot going on. It's been pretty much a train wreck for the last couple days with a small little range, attempted breakout, not much going on. We can see that the prevailing bullishness is definitely there, and they're even getting slightly more aggressive. It was originally like this, and now we've broken even further above that. So this creates a very interesting situation. First of all, we have the longer term type of channel, right? These are off of the two major anchor points from earlier, and transposed on the highs fits really well. But we notice that this low doesn't fit very well at all. So if we back up a little bit, we could also say, well, you know what? Hey, there might be some form of an aggressive bull channel that looks like this. So that is something that we need to pay attention to, in that this might just be overshooting the highs and they're running out of steam. That is something that we need to keep our mind on just a little bit. But in terms of the overall market play, right now we have a very strong blow-off on the highs, and likely with these big blow-offs through channels, it comes with a secondary attempt. So right now I'm looking for a secondary attempt to retest those highs. 23,750 or so is the objective. And this congestion that we're seeing right now, if we look a little bit closer in more recent price, we can see that on the 4-hour chart, we're still pretty choppy. We're not showing any strong bull bars, and the ones that do show up, we're not getting any follow through. So really we're just stuck inside this range, and it looks like the buyers bought the dip underneath, and that's really just kind of where we're sitting. We have a wide open swing test that has yet to come back to get, and that's going to be, a little bit further down. We've got a little bit of time until something like that hits. We're looking at around the 21,415 area. But overall, this just looks like we're kind of stuck in a range or a wedge, one of the two, and honestly both probably fit pretty well. If we mark it up like this, we can see that the descending nature of those highs does look pretty good. In terms of the lows, really don't have a whole lot to work with except for that range bottom. So we have a pennant formation. And that pennant formation, when we're looking for a breakout to the upside, I'm looking for this to be sort of an equidistant move. We have a very strong rally up, a pullback, secondary leg, and now we're looking for that third and final leg. And a lot of times that third or final leg ends up being a little bit weak, and that's the anticipation that we're looking for. So looking for a dip back, I would love to see 21,415 tomorrow, but likely not going to get that in any short amount of time. So instead, the buying pressure that we're stuck within, I think the only route to go for tomorrow is to look for the bull side, assuming that we're going to get a little more continuation off of the lows of this trap bottom, looking for a retest of probably back towards those range highs, looking for an objective to the upside tonight at around 23,210, and if we can get a little more follow through, primary objectives up to 23,750. Over on gold, we have a very explosive breakout move to the upside. We started off with an aggressive rally already right here, and then they just hit the gas pedal through the floor, smashed it through the floorboards, and just held that gas pedal down until it went ripping away, and that's what leaves us where we are now. We have a monstrous spike to the upside, and a situation that kind of similar to the euro, really. We have a very kind of close false high into a descending wedge. We could even mark this up as a standard sort of pennant formation. But we also have these previous lows from back here. So we have a couple different levels that we need to keep our eyes on. We have a wedge that we're forming right now, and we have the earlier wedge bottom that's coming into play up here, and this might just end up being one big wedge. Overall, though, it's very bullish. We have a big, big rip away. And we're looking for the mark to want to go back up and retest some of these previous levels. Notice over here on the chart, if we zoom in a little bit, there's some wide open gapping up here. All of this is open space, and the market loves to fill in those kinds of gaps. And that means that we have an objective at around 1350 in the short term. Now, 1350, are we going to hit that tomorrow? It's not that far away, really, so it is possible, but probably not. That's going to take a couple days until we get there. Looking at closer price action here, we can see that the buyers showed up with a big bull run, fell apart on itself, and then the follow-through is horrendous as well, leading us to believe that we're probably going to be in a little bit more of a range scenario with a bullish bias. So my game plan for tomorrow, I'm looking to approach the markets in a form of a wedge to see if they can attempt to break through the wedge high that we're sitting on top of right now. If they are able to, then we have a good chance at another few percent run through the top side. It wouldn't be a surprise at all. If we can get a solid close out of this, the next 4-hour bar doesn't close until 7 o'clock tonight, but if we can get a strong close outside of this, it wouldn't be a surprise at all to see them try to pop up to around 39 49.9 for about 1/3% gain to the upside. Now, overall objectives, of course, in the medium to long term are back up towards those highs to get that second, or actually third leg up, which is going to be at 45 and higher. But in the overnight, looking for a little bit more bullish continuation if we can break out of this wedge that we're stuck in right now. On crude oil, we have another really strong bullish market. Surprise, surprise. Huge amounts of bullishness going on, and, well, we're in a little bit of a pullback. Now, with crude oil, we do appear to be a little bit more of, again, you could draw it as a wedge, but it almost looks more like a flag. And with a flag formation after such a strong rally up, that could be a good thing for the short term, but not such a good thing for the long term. And the reason I say that is if we zoom in really close to price here, we can see that this attempted breakout up, when they came back to it, it closed outside of it and failed. That's what we call a twin reversal. And they haven't come back to retest it yet. Markets love doing this type of formation where you have a move up, they pull back, right? They try to break out and it fails, and then they come back and kind of poke that top again and fade back off, and it kind of looks like a crown, one of the things that we used to call as a crown pattern, because it's a type of reversal situation that we're running into. So even though this is a very bullish market, and the last thing that I want to be doing is selling it, well, we might need to be a little bit off the gas pedal in the coming days because we have a huge level of resistance on a retest, and it's going to be at around 64.75. Now again, this does still look like a flag pattern. If we can get a good breakout, they've failed so far, but if we can get a good breakout of these highs, then we're looking for a little more continuation to the upside to retest that top. But my primary objective right now is 64.75, and that's a big line in the sand for me to see if they can break out. If they can, then we have a really good reason to believe further continuation to the upside through 65 and higher. If they fail, well, then we have a potential deep correction around the corner, and that could lead into a pullback all the way back down to the earlier base at around 61.50. So we are in a little bit of a do or die situation on crude. It's just a matter of if they want to follow through and keep that push going to the upside and get a nice breakout, or if they want to end up falling on top of themselves and collapsing back down. Right now it looks like a flag. We'll see if we can get a little bit more of a breakout higher on a strong close, not this weakness that we saw in the last 4-hour bar, so we can get a little more continuation up. And then finally, the index markets, namely the S&P, continuing their monstrous rally to the upside. Very, very aggressive rally higher with very little correction. And that's something that, although it's nice when it's happening, it's always a little bit of a concern, right? This is also the concern when you look at markets like Bitcoin. When a market goes parabolic, when it's just up and up and up and up and up, little tiny pullbacks here or there, but not really much, it's a little bit concerning, right? It is a little bit concerning seeing this kind of chart, especially noting that the gas pedal looks like it was hit at the very end of this type of trend. That is definitely even more of a concern. Now we're running into a position where the market could be a little bit exhausted. And if a market is exhausted, that's usually when you anticipate starting to see a pullback. Now again, we're talking about pullbacks sitting at all-time highs. This isn't a market that I'm looking to short anytime soon. This is a huge, huge bullish market. But what I'm looking more for is the chance that if we do get a steep correction, then we can start finding some buying opportunities. And we're not talking like a 5 or 10% drop like the stock market's used to. I'm talking like 30 to 50% drop, right? We're talking big dip that has yet to hit. The same thing can be seen on Bitcoin and some of the other currencies more recently, big pullbacks. That is healthy, right? It may not feel like it when it's down 50%, but that is healthy for a trend to maintain its own weight, right? When it keeps running up like this, it gets a little bit off balance. So a correction wouldn't be a surprise to see at some point in the next couple months here, but for right now, we are very bullish and I'm looking for this market to continue. At this point in time, we have a wedge that has broken out of the highs. Likely this is going to be a little bit exhausted to the upside, so limited upside potential. What I would rather see is a pullback to retest at around 28.20 and then a bounce from there to reclaim those highs once again. So that's the game plan going in for tomorrow's trading on the futures markets. And overall, well, it's bullish. We're looking for the buy side on pretty much everything. The euro is massively up. The crude oil markets are up. Gold is up. S&P is up. The indexes are up. Everything is up. It's just a matter of making sure that you're buying in at the right price and not buying the top and being a bag holder at the highs while everybody else is taking profits. So waiting for a little bit of more opportune space, especially on the S&P. I'd still love to see that deeper pullback. But that's going to do it for the outlook. If you have any questions, as always, you can send me an email, jbrink@slingshotfutures.com. Until the next one, follow the plan, trade the plan. So as always, like we always say, make a plan, trade the plan, follow those rules, and you'll be A-okay. Until next time, we'll see y'all then.